Let me turn to the UK market quickly. The importance of this has been mentioned, that UK actively engaged in Islamic finance to support wholesale banking, which is a link to the capital markets. The importance of UK serving its Muslim population was a political agenda point during the Labour Party days. But interesting enough, Germany and France have got more Muslims and they've done less about it. But I think the key point here was that link to the GCC. Neither France nor Germany had that link. Kuwait Turk has a branch now in Germany. It shows their link to that country. And France thought that it could create a platform for North Africa, but North Africa is not necessarily an Islamic finance market, although since the Arab Spring there is more indications of that. Just a quick mapping of the banks in the UK. I mentioned Islamic Bank of Britain. That's largely a retail organization, and the sort of products it offers are the retail products offers. The other banks, which are BLME included, is Qatar Islamic Bank's subsidiary in the UK. It's Gatehouse Bank, which is a subsidiary of Securities House, and European Islamic Investment Bank. Both of these tend to be sort of more wholesale in nature, and some of them have taken more of an investment banking approach, like Gatehouse and European Islamic Investment Bank, and more recently more towards a private equity model. BLME, I suppose, always intended to be to run a balance sheet. We're the best capitalized one, but for the purpose of actually acquiring Islamic assets in the UK. So we've been at the sharp end of what you would call lending, and in the UK, and understanding how to finance organizations which are not necessarily looking for Islamic finance. And that's given us good insights into what the customer wants. As you see from the table below, both in terms of equity and total asset, BLME is larger than the rest put together. A quick landscaping of the segments. I think if you look at the sort of inquiries we have from the retail all the way to the blue chip, we find our main battleground to be the SME market. SME for two reasons. One is that at the moment they're very poorly served by the main banking, the conventional banks. And the second thing is that you tend to make the margins, and banks of our size, the cost of funding that we have is quite prohibitive. And we therefore need to look for a client base that actually allows us to offer our products competitively. We look at quite a what I would call a traditional merchant banking model to serve this sector. We offer corporate financing, asset-based lending, and high-yield note issue. When we look to offer issuance for blue chip or FTSE 100 type clients, for them Islamic finance is not really driven because of their need for Islamic finance, but effectively a liquidity source. And for that, if you have a commercially viable product, then you get some traction. Around 2009, 2010, some organizations actually approached specifically looking at Islamic finance to diversify their borrowing. And that was something as part of their investor communication. Just a quick landscape of where Sukuk sits within the what I would call the normal capital markets product. In many ways, Sukuks are considered by fund managers here akin to either emerging market bonds, which are issued by government agencies or high-yield bonds, which are corporate bonds issued here in the UK by sub-investment corporates. Size around the same size of not enough liquidity in a 200 million issue. Typically, for investment grade, you're looking at 500 mark or higher. Tenors, funny enough, in the last 3 or 4 years, that's one area of convergence. Everyone's issuing certainly less than the 10 or 20 years that was commonplace for corporate bonds. And now 5 years seems to be the top end for any financing, because banks cannot raise the money themselves. But it's a buy and hold. It's a buy and hold instrument, though. We find that the spreads are quite wide when you buy Sukuk. IDB, which issues the most liquid Sukuk, it's a AAA issuance. That in itself, when you actually want to sell it, you might get good buyers for it, but you can never buy it back. So there isn't enough depth, and they issue in 500 million tranches. So what the market actually needs more here is more regular issuance, so there is less panic buy in the market. And the instruments themselves, I think the key aspect of this on the Sukuk market is that the fund managers almost treat it as a buy-to-hold issue, and the banks don't see enough regular issuance. There was a roadshow by Sharjah Islamic Bank, and when we went to it to see what's this new $400 million issue going to work out, and the only reason they said they were going to issue as a one-off was because they couldn't get matched liabilities for their loans. So they basically package all of this to a one-off issue to satisfy their local regulators. So it wasn't as part of a normal program for issuance. And as soon as you sort of put those flags up, the premium goes up because everyone just considers it a buy to hold. I'm not going to delve too much in the detail of this, except one thing. The relationship here between the issuer SPV and the originator is continuously one of asset transfer and ownership. And this is the key difference between what we have here, which is an Ejara-based structure, and what you would have in a normal bond issue, which is a debt structure. So the SPV, the issuer SPV, in a conventional transaction would basically lend money and borrow money. And both of those contracts are equated to a debt financing contract. Whereas here, we keep having the movement of asset and the assignment of asset and the obligation of repurchase, etc. And that's, from a taxation point of view, every time you need to be mindful of, is there a VAT payable by the lessee? Is there a capital allowance movement? And all of this makes the difference. Now, if you've done car leasing transactions, you might be conscious of some of these issues. But even then, or if you've done securitization for British land, but even then you find that the actual issuing entity is, all it issues is just debt and not the beneficial ownership of the assets. One thing that London is quite proud of is that there are lots of sukuks listed on London Stock Exchange, and one of the reasons that a number of banks here were hopeful that the capital market will develop in their favor was that if you just look at the mixture of that, a good chunk of sukuk assets are issued by banks in GCC for the purpose that I just mentioned, for matched funding. And if you're a bank belonging to some of those banks, like QIB here, belonging to QIB Qatar, we are owned by a good chunk of us, 20% by NBK, National Bank of Kuwait. We thought we would be a conduit for this engagement, but no, they come and engage HSBC to do that. And I think it's interesting when you see the power of the bulge brackets here. And I was making a point earlier that when we were sitting here amongst Muslims, how few mosques or Islamic institutions actually deposit with Islamic banks, in fact none. And part of that is also because very few Islamic banks are rated adequately in this country to be a safe haven for that purpose. But I think one thing that will help the industry to grow is actually other parts of the Islamic financing network help one another. And trade finance is the best example of that. And I'm going to finish off on that. But yes, banks do issue. Real estate is a darling asset of Islamic financing. In fact, a majority of the UK legislation is targeted in the capital markets area for that particular purpose because it's the asset class of choice. Many of the GCC investors in the UK tend to be real estate investors. Quickly, distribution. I think I've just pointed some of the advantages and disadvantages. Not all sukuk get listed. The sukuk that get listed tend to be the rated quasi-government or governmental type sukuk, or ones that belong to the banks. Many are just private placement. The good thing about London is that it has one of the highest concentration of the fund management and the asset management industry. And majority of the sukuk investors are actually not Islamic market. They are asset managers in the conventional market. And that in itself gives a big platform to attract investors for sukuk. And I think it's another point that is obviously operating in the market, because that's what happens. If you look at the geography here, nearly half of the investors were European for something which is clearly Emar, which is a United Arab Emirates issue. And also in terms of syndicated and club facilities, the UK, again, one can't say in the conventional side, quite a liquid and standard documentation for loan syndications, but the same applies for syndicated murabahas and syndicated ijaras. There's an active market for that, and it's a lot of the players that you see both in GCC and here have come through the syndication desk. So the networking aspect of that, and you cannot underestimate that, does exist. I think just to stress on the private placement, and this is part to do with the framework that's established here. The Alternative Finance Act actually addresses one issue quite importantly. In Islamic finance, the concept of ownership is quite important in generating rent for a tradable instrument, which you're allowed to sell that beneficial ownership, and that's how sukuks are traded. And majority of investors don't want ownership. They don't want the hassle of being responsible for taxation and everything else associated with ownership. And the main interest is security. And the Alternative Finance Act actually addresses this point quite well, that a sukuk investor whilst has a beneficial ownership in that, is actually that ownership is behaving like a security, because at the time of default, you have to sell back. And it allows you for doing so to the original borrower, and that way you create a clear obligation, a debt obligation on that person. That's quite a distinctive feature. Remember, the point that you do that is when the guy is on the default, and that's when you exercise your security and you're passing the asset. But the legislation allows you to do that without losing any of your rights. Again, liquidity and depth. This market in its conventional side is quite a liquid market, and it will not be an issue at all for issuing benchmark size sukuks in the London market. The English law and the reliability of jurisdiction of the English courts is quite dominant in pretty much all Islamic financing transactions. We choose English law. Uniquely under English law, we have the trusts and the trustee language, which actually facilitates development of capital markets. It doesn't quite work under civil law, and majority of the capital markets issues tend to steer towards English law. And finally, in terms of risk management, the contracts by ISDA for Islamic finance derivatives are now developed. But certainly in terms of risk management, the counterparties in the London market are the ones that offer the hedging lines to the Islamic banks. And you can, I mean, there are many large counterparties, to be honest, but it allows you to actually place some of the risks associated with the LIBOR fixing. I've given an example here where I've put some of the conventional borrowers on the map in terms of both high yield and investment grade. If you take GE, which is the often quoted Sukuk by a conventional borrower on the map, this is an investment grade issuer that has looked at diversifying itself into the Islamic market with a 500 million issue. It hasn't actually repeated that issue, which is a moot point, and there's a lot of question why that hasn't happened. But certainly in the Saudi market, and Saudi will be the main pump for this, Aramco, and we've seen issuance and other large Saudi organizations, albeit a lot of this is in Saudi Riyal, but being a hard peg currency, it is attractive certainly to foreign banks. On the high yield side, we've seen the Wings program by Emirates, which is a dual. Emirates is mainly a conventional issuer, but also issues in the Islamic market. But you also have the strict Islamic issuers like Dar Al Arqam. And that landscape, as I showed you, it's very similar to the split we have here with between the investment grade and high yield, where the high yield tends to be mainly private placed market. I think I've already talked about taxation. I won't do more on this, except saying that a lot has been done regarding the transfer taxes, SDLT and others, as well as on the capital gains tax, which is a principal issue that we have in the UK in transfer of assets.